Hey guys, today let's focus on that trader psychology. What I want to do specifically is talk about the around the horn trading plan. We've been talking volatility bands nonstop. That's what everybody wants to talk about. They're fun. You're doing them on the fly. But in the background, I've got my around the horn trades trading just like I always did. And I also have the Baltimore chops and the XRVs going on, right? And this morning somebody asked me, well, how do you handle all that workflow? That goes to that psychological stuff that we gave you guys to try out. Those inventories that you took, what do you like in terms of follow through? What's your opinion on risk aversion or risk tolerance? And finally, how neurotic are you once a trade is on? Are you comfortable setting up a trade to automate and go on in the background while you're doing something else? And how much are you worried about the risk involved in doing just that? So for me, when I go and I put these around the horn trades together and I put these conditional orders on them, I just let them go. They're out there. My kid used to say, Daddy, they go where they go. And that's the truth. So we're setting these up and we know that first thing in the morning what's going to happen is they're going to trigger and they're going to do what they do. Our job is to focus on the volatility band trade and then also to look at the Baltimore chops. And then also we have to look at the XRVs, right, and move the stops once the trade is headed in our direction. But all that being said, let's take a look at what happened with the around the horn trades this morning. They were, it was a big basket of trades again, big basket of stocks, got your very diversified portfolio of intraday trades. And I'm very curious to see, don't do the numbers as we go along. Don't add them up in your head. Just wait until we get to the last of the stocks to watch and then ask yourself, do I feel like that was a good day or a bad day for the plan in terms of how many points it booked or how many points it lost? Because I think this is an interesting exercise because it focuses your attention on your perception of what's going on and then how important is that perception of what's happening in terms of keeping you in the positions that you're supposed to be in and keeping your head in one place, right? Because the war room, we call it the war room online, but the war room is squarely between your ears. So let's take a look at the around the horn trading plan and what it did today. First one on the list from the trading plan, Church and Dwight. And you can see here that, this setup was, kind of was what it was, I guess is the best way to describe it. And what happened here, you had a trigger at $96.01. Happened sort of 15 minutes into the trading day. 96.01 was the entry, never made it 50% of the distance to the target. Turned around, hit the stop, $95.32. Are we worried about that? No, because as I said many, many times, the criteria for whether or not we did a good trade for the day is whether or not we did what we were supposed to do. Plan the trade, trade the plans. The first one on the trading plan stops us out. Then we get to the second one, and lo and behold, it opens above our entry price. It goes and it moves all the way up to the target. So now that counts then as a first entry. When it comes back down again, hits that 22.15 threshold, it does not get 8 cents below. So the automation is not triggering us in because we haven't made it 8 cents below the entry criteria. When it finally does make it 8 cents below, it travels all the way down to the stop, comes all the way back up again, gets us in, right? So it got us in right here on this, this violation of our entry threshold. Gets up, it's having trouble with the pivot. It's still having trouble with the pivot, and we're coming up on 20 minutes to the closing bell. This one looks like it's going to go out pretty flat in terms of where it opened and where we were expecting it to go. Now let's look at OMI. Here is one that was picture perfect this morning. It opened and then it tracked lower down to $25.85. You heard me talk about it in the room. I did take this position. This is one of those situations where I didn't have time to go and say it has to go 8 cents below my entry price. So it opened, it tracked down, it hit within my allowable slippage. And as soon as it hit my allowable slippage, it filled me. So I had a little bit of a slip, even though you can see here it went down to 25.85. That's not where I got in, right? I got in at my maximum slip, which was 25.95. Then it tracks higher, $26.22. At that point, our 25.55 stop becomes a risk-free stop at 25.85. We want to put it where the entry was supposed to be, not where I got filled. And then it goes, of course, and makes it up to $26.60. So that one booked a profit for the day. SIG, This one got us in on the first bar and got us out on the third bar. That's always very unpleasant. Never made it 50% of the distance. The profit target on that go around, and over the course of the day, it really didn't look like it was going to trigger again. Then right around 2 p.m. or 1:30 Eastern, it went popped through the entry price, $22.24. Looks like that one's going to go out kind of flattish on the day as well. Next, we had Tenet Healthcare. This triggered us in right in the first bar of trading on the session, comes back down, never goes down the stop loss, hadn't made it to 50% of the distance to the target, so the logic for the trade stays in place. The automation keeps you in, gets you up 50% of the target in bar number 4 of the trading day, $28.66. At that point, we've got it moving stops break even, and then, of course, $29.06 is the profit objective, and that's where that trade wound up. And then finally, from the around the horn section of the plan, we had Waste Connections. This one was a short, and it's kind of a frequent flyer on the trading plan. The spreads were not great this morning. Price action was not great this morning. So it was very obvious that the specialist or the designated market maker on the stock was trying to put something together. That something wound up turning around and taking us to a stop loss with slippage. So we had a 104.61 short sale, made it almost down to the 50% of target level. No cigar though. Tracked higher, went right past our 105.12 stop. Got a 105.20 actual print there on the stop out. That's okay. It's the way it goes. So just keep those in mind. That's the first part of the trading plan. Second part of the trading plan that we had loaded up this morning was the stocks to watch. And you heard me in the room say I was going to take Autoliv on the open. Autoliv ALV, this is a symbol I like to trade. You can see here that it opened just above that 82.61 desired price, let's say, that we wanted to get in at. It did open within my allowable slippage on the position, so I let the trade go. We talked about that briefly in the room this morning, and then it, of course, went up and hit our profit objective very quickly. Not as much on the trade as there would have been if we could have got a clean entry, but nevertheless, still a good trade. Aqua, this never hit, so this happens too, right? Evoqua Water Technology. Some days we have things that nothing hits, and other days we have, situations where everything hits. But today, Aqua, no cigar on this one either. Finally, we had Floor and Decor. This one, just a picture-perfect trade. It opened right below our desired entry price, tracked up through 83.55, got us 50% of the distance to the target, and then very quickly made it up to that 84.27 level that we were looking for. This was a great trade on the morning. So we had a mixed bag, right? We had some losers, we had some winners. Where do you think we wound up on the session just by leaving these things out there automated, diversifying our basket of trades and getting ourselves in front of the opportunity? This is where you put your thinking cap on. We wound up in this situation having a pretty good day. Between the around the horn trades and those stocks to watch, you actually booked about $1.03 per share traded. And so what I'd love to know, and I would love you to think about, is what was your feeling as you were going through and looking at these? Because sometimes the psychology of seeing the stops hit and having the stops hit before other trades trigger puts you in a position of not being very well sort of situated to take a next trade. The next trade looks like, boy, it's doing just sort of what that last one did. And holy smokes, if I get in front of this thing and this goes to the stop too, I'm going to have a rotten day. Remember, plan the trade, trade the plan. That's the way to reinforce the psychology and keep in front of the opportunity. The other thing to think about is, so, we talked about conscientiousness, right? How much do you follow through on what you're doing? That follow through on the trader psychology profile, what that indicates is, how good are you at following a plan? And if you scored low on that, you want to boost it. You want to just go and tell yourself, I need to get myself to the point that the most comfortable thing for me to do is what I had planned to do. I'm not second guessing everything. The risk tolerance, no surprise here, right? We're all entrepreneurs, we're traders. Most of us are going to score fairly high on that. I scored very high on risk tolerance. Julie scored very high on it. If you're low on risk tolerance and you start seeing stops piling up, it's going to make it difficult as well to get in front of that next trade. And then finally, neuroticism. There just is no good level of neuroticism. You don't want to be just focused on these trades and brooding over them and missing the other opportunities. Because when you get into that trader work environment scale that I designed, What that's really trying to figure out is your workflow. What is it like for you to get in front of these situations over the course of the day? Now, we're not going to talk about the Apple trade today, the volatility band trade. We talk about that just about every day. You guys all love it, but we'll talk about it again tomorrow, because today I want to focus on just this workflow portion of the trading plan. These two things, this and Baltimore Chop, which you can totally automate. And we'll talk about XRV and we'll talk about the volatility bands in another video. But for now, just think about on that work environment assessment, how did you express that you like to work? Because there's a big thing going on for a lot of people here where you're not working in the situation that you're used to working in. You're working from home now. COVID has things locked down. Things have changed for a lot of people, and quite frankly, they're not ever going to go back to normal for a lot of us. This is the way that we're going to be working for the foreseeable future. If you can take and compartmentalize your trading the way that we do, where we're taking the around the horn trades and the stocks to watch trades, and we're pretty much just automating what those are going to do. And then we move over and we take those Baltimore Chop trades, which give us huge opportunities, especially during earnings season, and we automate those as well. Then it gives you this workflow of, okay, the first 5 minutes of my day, I'm focused on the volatility bands. Then I'm going to look over at the Baltimore Chops. I'm going to find the opportunities there. I'm going to set up some automated trades. I'm going to look back in another 5 minutes to figure out whether or not they triggered. Do I have to move the automation around a little bit? And in between, you can keep moving back and forth to those volatility band trades that you guys like so much. But for now, let's take a look at today's 2SD opening gap scanner, the Baltimore Chop scanner, and how those played out as well, and then figure out between those two portions of the plans that we look at every day, where did we wind up for the session? So here we go. You're looking at the scanner from this morning. This is the version that I see. Of course, this is how I mark it up for you guys. And you can see that we've got really nothing that popped on earnings. So given that we are going to be making some, taking some discretion here in how we place these trades, what I am looking for is, what's going on news, and then which symbols that are up are sort of making sense in terms of the way that they're trading. You want to make sure that when something's not earnings and it's not news, that it doesn't just open and flatline, because a lot of times that can be an indication that what you're dealing with is actually a stock that's been taken over or something. But today, it was fairly clear that CXO and GRUB were going to be the stocks from the scanner that we were going to focus on. We also looked at MDRX. It just didn't set up. I had every intention of, if it broke the lows, that I would go in big on that one, take a bigger share size. It's an $11 stock. You really have to if you're only shooting for 18 or 20 cents. Just never came together. But, these other stocks on this list, the ones that are highlighted in yellow, those are the ones that I intend to trade. Those are the ones that I'm setting up on my machine. And then, of course, what I want is for everybody to have the opportunity to go and pre-plan these things the same way that I do. So let me show you how I set these up, what the stops, the targets, everything looked like, and then we can call it a day, and I can go for a hike with my buddy Connor, right? Because I think we are just a little stir-crazy here today, the two of us. So let's move on to CXO. This one was you guys know this was a frustrating trade for me in the morning. It's because I'm not really big on trading these energy stocks. We did manage to pull this one exactly where we wanted to have it go. You can see here, we were looking at this volume by price data over here. 48.93 was our target. 49.49 was the entry. Where would you have put your stop if you were taking this trade, or if you did take this trade? If you weren't in the room this morning, right, you didn't have the benefit of hearing us talk about it. But I had my stop right up there at 49.92. So the entry bar high, very frequently the stop on these, it's a nice 1, 2, 3 kind of a progressive entry. This is the textbook version of the trade. It's nice. I don't think it was as nice as Grub. So Grub really made a lot of sense. It left what I call an infield fly setup. That's this thing right here. Infield fly. If you're an Around the Horn fan, if you read Around the Horn, a trader's guide to consistently scoring in the markets, you know that infield fly is an extension reversal pattern. When I see a market that gets very extended and I see that bar right there form, then what I anticipate is that I'm going to get a move lower. And in this case, the move that we were looking for was not down to the open of the first bar of trading. There was no volume by price there. So you always want to go out and look at the node and see, is there going to be support somewhere on the way to that opening tick? Not necessarily true that that opening tick is significant. In this case, it's downright insignificant. So we had an entry, $80.27. We had a target, $79.81. Perfect trade. The stop on this one was just up above the entry bar high again, $80.44. That stop came into play, I'm going to say, a little bit after the trade was put on. Initially, I had a stop up here at $80.64. Once it started tracking in our favor, I just went and pulled that stop down to make sure that the reward to risk got better and better as we were in the trade. So there you have it. You wound up over $2 per share traded on the stuff that you could pre-program. That gave you lots of time to focus on the other trades, the volatility band setups, BABA, Tesla, Apple. Those were all really good setups today. We talked about them live in the room. BABA almost did all 3 layers of the bands, which is a usual occurrence when it triggers early in the session, sort of 2 bars, 3 bars in. That's the sweet spot for that one. It tends to go and just gun right through our levels, which is fantastic. Apple was really good today. You had to go and put the trade together. I'll make that another video where I can show you sort of what I was thinking in terms of the different fib nodes that happened over the course of the morning and how you could sort of anticipate where those twists and turns were going to be in this morning's trading, because there were plenty of trend reversals on Apple. And then the XRVs, same thing, right? They are sort of a set it and forget it thing. The only time that I'm looking back at XRV is to see, is it time to move the stop? Because that stop doesn't go to break even. That stop just goes from real wide to less wide. But that's the best way to handle that trade and just always has been. Some people, one of our students, Goran, he traded it just wide open. He didn't have a stop, entry, target, or end of day. That's what was getting him out of that trade. So lots of ways to sort of move these things around and make them fit your psychology. But the important thing I want to focus on here today is that it is all about your psychology and getting your psychology to fit with what it is that you're trying to accomplish. All right, you guys, I will see you tomorrow in the first hour trading pit. I'm going to go hang out with Connor, and I hope you all had a great trading day, and you're going to have an even better one tomorrow.